Hello there. Welcome to Financial Accounting N5. We are still working on a paper from June 2023. Today we want to look at question 5 on that question paper. And on that question, we are given a pre-adjustment trial balance of Squani traders on 30 May 2020. So we've got our questions that are going to follow after this pre-adjustment trial balance with the balances that you are given there. So if you go down the question, you will see that we have information that is there below the table. So below the table there, it reads, answer the following questions from the information on the pre-adjustment trial balance of Squani traders on 30 May 2020. Show all the necessary calculations. So the first question is saying, give 2 examples of an expense account other than stationery. So they need examples of expenses that we are given in the trial balance that is above. So we'll go there to check of any expenses that we have there. You see that they are expenses. We see them under the nominal account section, and if you go down the nominal account section, you'd see that we have got sales, not an expense. This is revenue. Cost of sales. Their cost of sales, we don't regard them as an expense. We go down to check other expenses that we. So the expenses that are being asked there are expenses that we put under the operating expenses in the income statement. Those are the expenses that we are looking for here. So if you go down, you'd find that you also have credit losses is an expense. Credit loss is an expense. Remember, these are bad debts. So they come as an expense under operating expenses in the income statement. Then we go to stationery. Stationery is the one that is said other than stationery, so we leave it. And then you go down, you see that we also have salaries is an expense, insurance is an expense, telephone is an expense. So for 5.1.1, 5.1.1, we would say we have one, we can have insurance there. Here's an example of an expense that we have. We also have salaries, telephone. If you check again, we've got also interest on loan is an expense also. So these are the examples that we have in the question, but that question is only asking for 2 examples, so you can just pick 2 that are easier for you there, but all of them are correct, right? We go to the next statement. The next question is saying which section of the trial balance will be used to draw up the income statement. So when you're drawing the income statement, remember that's where we're going to put the revenue, we are going to put the income, the expenses, and any receipts that we are going to receive during the period. So that information, we see it in the nominal section. So if you come here, this nominal section is where we find these amounts. But in terms of income and expenses that we are going to put in the income statement, we only the information that will be under the nominal section. For example, we have salaries, for example, 30,800 represents the amount that was paid, but not the amount that is representing for the period. So that's why we then adjust for any prepayments and accruals that will be taking place. So but basically the basis comes from figures that you are given under the nominal section, although we may adjust those figures according to if there's any prepayment that has been made or any accrual that is there. So that is what what we adjust there. Then this is 5.2. So the answer there, the appropriate answer there for 5.2, we are saying the nominal account section. The nominal accounts, the nominal accounts section. So I will go to the 5.3. 5.3 is saying calculate the markup rate or the cost price applicable to Squani traders. Calculate the markup rate on the cost price. right? Basically, we need to know the formula that we use to calculate markup. But basically, let's try to see where the formula that we use for markup. Markup, when we're calculating markup, markup is equal to gross profit over cost of sales. Then we multiply by 100 over 1. So this is the formula for markup. So if you go to the question, we want to check if you've got the information for those figures, that is gross profit, cost of sales. You see now under the nominal section, the figures that we are given the figure for sales is 1,211,206, and then we are given the figure for cost of sales is 984,720. So we don't have the figure for gross profit. So gross profit, we can calculate it by saying gross profit is sales minus cost of sales. That's the formula for gross profit. You can just put it down. Gross profit. We say sales minus cost of sales. Then we find the gross profit. So we can find the gross profit there. This is our numerator. Then our denominator is cost of sales to be 984,720. So we are just saying 1,211,206 minus 984,720 is our numerator to get our gross profit. Then we divide by cost of sales, which is 984,720. So we can just do that there. So this is now 5.3. So here we are saying 5.3. We are saying now it is equal to gross profit. Our gross profit, we said we are going to say 1,211,206, and then we are going to subtract our cost of sales, which is 984,720. Then we say over the cost of sales, which is 984,720. And obviously, we are going to multiply by 100 over 1, so that we leave it as a percentage. So here now we multiply by 100 over 1. So obviously, when you say 1,211,206 minus 984,720, you are supposed to get there 226,486. Then we divide that one by 984,720. Then we multiply by 100 over 1. So if you calculate that, let's try to calculate that one. Right. When you calculate that, you are going to get 23%. Get 23%. So here is equal to 23%. So this is going to be our markup. So this is our markup. So this is what we have in terms of 5.3. Then we move on to the next question. So the next question, we are going to see it on the next page. So see what we have next. Right. Right. On our next question, that is 5.4. The question is saying, name the account in the trial balance to which item interest on a fixed deposit is related. So a fixed deposit, interest on fixed deposit is an income. It's going to be interest received. Remember, when you are doing a fixed deposit, you are putting an amount of money in a bank for a fixed period at an agreed rate of interest. So when interest come, it means it's going to be received. It's interest received. We put it under it's under income. It's one of the income that we receive during the period. But obviously, when we adjust it in the income statement, we are going to adjust it just below the net profit there, as we add the interest received. So that's what we have in terms of the fixed deposit. So we go to the pre-adjusted trial balance and see which figure they are asking there. So you get the figure there on top there. So you see that this fixed deposit, uh, which we have here, the fixed deposit that we have there, which is a 22% is the figure that they are asking. If you go back to the question, you would see that the question is asking, go back to the question. The question is saying, name the account in the trial balance to which the item interest on fixed deposit is related. So the fixed deposit that you are given there, the fixed deposit that you are given there is the one that is being asked. So fixed deposit, neighbor bank, 22% per annum is the figure, is the description of that figure that is being asked there. So we go back there and just indicate what we have. So if you come here, we're going to indicate there that it's fixed deposit, fixed deposit, fixed deposit from the bank. Which bank? Let's try to see the name of the bank that is given there. It's a neighbor bank. Sorry, it's not neighbor bank. Let's check there. Fixed deposit, yes, it's neighbor bank. Neighbor bank. And in brackets, it's 22% per annum. So that is the response that you are supposed to give there. Then we go to the next question. It's saying bank as indicated will be classified as a liability. Give a reason for that. So we go and check the bank balance that we have in the question. Let's try to see the bank balance that we have in the question. We see that the bank balance that you are given in the question has got a credit balance. And we know that when the bank has got a debit balance, it's an asset. We put it under the current assets. But when it's the credit balance, it represents a bank overdraft. And we know that when there's a bank overdraft, it means money is being drawn from the bank account, which is more than the balance that is there. For example, you put 100 rands in the account, then withdraw 150, which means there's an excess. You withdraw money that is above the balance that is in the bank. So there's going to be a deficit, and that deficit is represented as a bank overdraft. And it shows a credit balance. So that's what we have there. So this indicates a bank overdraft. So we can go back there and indicate that bank overdraft. Because we can just state that the bank overdraft. Bank overdraft. Bank overdraft, or you can just state that the bank has credit balance as per trial balance. That's another appropriate response that you can give there. Then you go to the next one. Consider the following adjustments to the pre-adjustment trial balance of squared traders above. Then answer the questions that follow. Adjustments, depreciation must be provided as follows. We've got equipment at 10% per annum on the diminished balance method, and vehicle at 10% per annum on the cost price method. The vehicle was purchased on 30 December 2019 at the value of 6,000. So we've got different methods of calculating depreciation that you are given and in terms of equipment and vehicles. But let's start with equipment. Equipment is being said is 10% per annum on the diminished balance method. And we know that when we are using diminishing balance method, the formula that we use there to calculate depreciation, the formula that we use for diminishing balance method, it's equal to percentage, and we multiply by the carrying value. Where the carrying value, you find it by saying costs minus accumulated depreciation. So that's the formula that we're going to use. Obviously, first we are going to find the carrying value by saying cost minus accumulated depreciation. Then the answer that you get, you multiply by the percentage. Then you get the depreciation per annum. So we go back to check the figures that we have. So if you go to the question, you see that for equipment, we have got 20,000. Sorry, for equipment, we have 64,000 is the cost. This is the cost. So this one is representing the cost. And then we have got accumulated depreciation for equipment, which is 17,400. So what you are going to do, you are going to say 64 minus 74, 17,400. Then after that, you get to multiply by the percentage that we are given there. So we can just go and summarize that one to find the depreciation for equipment. So we are saying, we say the percentage is 10%. Remember, the percentage is 10%. So we are saying 0.1, which is 10%. Then we multiply by the difference of cost and accumulated depreciation, is the carrying value. Remember, carrying value. So we are saying the cost that you are given in the question is 64,000. Then we subtract the carrying, the accumulated depreciation, which is 17,400. So when you do that, let's try to calculate that so that we find the correct answer there. So when you calculate there, obviously when you say 64,000 minus 17,400, you are going to get here 64,000 minus 17,400, you are going to get 46,600. 46,600. Then you multiply it by 10%, you get 4,660. So this is the depreciation for equipment. Then we go to the one for vehicle. Go back to check the one for vehicle. The one for vehicle is being said vehicle at 15%. So the rate is 15% here. We have the rate as 15% on the cost price method, which is the straight line method. Then last statement is saying the vehicle was purchased on 30 December 2019 at the value of 6,000. So what we have there, we have got a vehicle that was purchased during the year, that is at the end of December. So it means we are going to calculate the depreciation of that vehicle that was purchased on 30 December. And then we apportion in terms of the months that that vehicle stayed in the business. And then we add now to the vehicles that stayed the whole year. Remember, we have got the total value of vehicles that we are given at the end of the year, including this 6,000. Then what we are going to do, we are going to remove the 6,000 so that will remain with the vehicles that stayed for the whole year. So if you go back there, you'd see that for vehicles, figure that we are given for vehicles is here 98,000. So the 98,000 represents vehicles at the end of the year. Remember, these balances are at the end of the year. Then the 6,000 vehicle came on 30 December. So we are going to say 98,000. We subtract the 6,000 that came during the year, and we get 92,000. So what it means is these vehicles of 92,000 stayed the whole year, and this one only was there from 1 January to the end of the year. So that is what we have, and we want to check again which month was the or which date was the year ending. This is 30 May 2020. 30 May 2020. That's where the year is ending. So what we are going to do is now we go there and see the date when the 6,000 vehicle was purchased. It was purchased 30 December. So it means it stayed in the business. It stayed in the business 30 December. So it stayed January, February, March, April, May. 1, 2, 3, 4, 5. Because the year is ending May, so it means it stayed 5 months. So we are going to calculate depreciation of this vehicle, and then we multiply by 5/12 because it stayed only 5 months. So that's what we are going to do. So let's try to make that calculation. So here on depreciation, we are saying depreciation of vehicles. Now we are now on vehicles. So on vehicles, we are saying the one that said the whole year was 92,000, and the rate is what? it's 15%. So we are saying 0.15, then you multiply by 90, it's 92,000. Then you get the depreciation of the vehicle that stayed the way, which is now 13,800. And then the one that came during the year, it said 5 months, and the rate is 15%. Then you multiply by, it was 6,000, and then you multiply by 5 over 12. We multiply by 5 over 12. Remember, also the formula that we use to calculate depreciation using straight line method is just percentage. We use percentage times cost. This is straight line method. This is the one that we are applying here. So here, the answer that you are going to get here, the answer that you are going to get there, when you multiply that one, you're going to get 375. So this is depreciation that we are adding. So the question wants total depreciation. So we are adding this figure. We are adding this figure here, this one, and then we add this one, and then we add this one that we got there for equipment to get the total depreciation. So total depreciation, we are now saying, let's try to see total depreciation. So we are now saying total depreciation. We are now saying the depreciation for our equipment, we got 4,660, and then we multiply by the vehicles that stayed the way, which is 13,800, plus this one that stayed only 5 months, which is 375. Then if you add those figures, you get 18,000. Get 18,835. So this is the total depreciation for the year. This is the total depreciation for the year that we have. Right. We go to look at the next question that we have. We go and check the next question that we have there. Right. So the next question is now asking us calculate the closing balance of accumulated depreciation on the vehicle. So accumulated depreciation basically means depreciation of the non-current asset from the day it was purchased up to date. So we are going to say depreciation that you are given in the trial balance for vehicles, then plus the depreciation that we got for this year. So this depreciation we've just calculated it there. You'd see that for vehicles, we calculated for those vehicles that said for the whole year 13,800 plus the one that came during the year, which is 375. So we are going to say 13,800 plus 375 plus the figure that we are given in the trial balance there. We go and check that one, the balance that is given in the trial balance in the question. Right. If you come here, you'd see that the figure that you are given for accumulated depreciation for vehicles is 20,000. So you're going to say 20,000 plus 13,800. That one that we got for a vehicle that's it for the whole year plus 375. So we can just go and summarize that one. So if you come here now, we are saying we are here. So we are saying here. We are saying 20,000 is the one that we are given in the trial balance. Then we add for the vehicles that stayed the whole year, which is 13,800. Then we add for that one that was introduced end of December, which is 375. Then we get the accumulated depreciation now, which is for 34,175. So that's what we have in terms of accumulated depreciation for vehicles. So this one becomes our accumulated depreciation for vehicles. Then we go to the next one, 5.7. Mr. Adams, a trade receivable, was declared insolvent. His debt of 1,250 must be written off as bad debt, adjust the allowance for credit losses to 8% of trade receivables, and create an allowance of settlement discount granted to 2% of the good trade receivables. So here the first question is saying, in which journal will the dates of Mr. Adams be written off? So when you are writing off bad debts, you initially when you are recording them, when you are recording the debtors or trade receivables, you record them. You record them in the sales journal. You record them in the sales journal. But when you are writing them off, you should record them in the general journal. So here the response here that we have is general journal. So that's what we have. So you can just write here general journal, where we have those entries taking place. So you can as well try to calculate on the second part there. The second part is saying calculate the amount of the debtors control after the adjustments. Calculate the amount of the debtors control after the adjustment. So what we are going to do is we are going to take the figures for debtors control in the or trade receivable control in the trial balance. Then we are going to remove this 1,250, subtract this one because this one is written off. Then the answer that we are going to get, we adjust the allowance for credit losses, which is 8%. Credit losses we are also writing off. So it means we are going to subtract 8% from the answer that we get. And then after subtracting 8%, we also subtract the 2% here, which is an allowance for settlement discount granted to 2% of the good trade receivables. So what we are going to do there, basically what we are going to do there, we are going to make sure that we subtract the, for example, we have the 8% that has been removed. So when 8% is removed, it means it's being removed from 100%. So I think we can just try to analyze it in the form that we have, for example, here we have got 8%, so it's being removed from 100%. So if you say 100, minus 8, you get 92. So you're going to multiply by 92%. And here again, a 2% is being granted, so it's going to be 100 minus 2, and you get 98. 98%. This is 92%, this is 98%. So as a decimal, this one becomes 0.92, and this one also becomes 0.98 as a decimal. So those are the factors that you are going to multiply with. So let's check the amount of the debtors control that we have in the question. So if you come here for the trial balance, you'd see that the figure for debtors control that you are given is here, trade receivables control fee of 150,000. So that's the figure that we are going to use. So we are going to say, let's try to create some space there so that we can put this solution here. Right. So what we are going to do, we are going to say initially, the figure that we are given there is 150,000. So we are going to say 150,000. Then we subtract this one that was written off, which is 1,250. And obviously, when you subtract that one, you get 148. You get 148,750. So having getting this now, after that, now there's an allowance of credit losses of 8%. So so this one is representing 100%. So when you remove 8%, it's here, 100 minus 8, you get 92%. It's 0.92. Then you multiply by 0.92, you multiply by by this one 148,750. And then the answer that you are going to get, you are going to multiply it by the next statement is saying and create an allowance for settlement discount to 2% of the good trade receivables. And this is the 100 minus 2, that it becomes 98. Was the answer that you are going to get there will be representing 100%. Then you remove the 2%, it becomes 98%. When you multiply it by 0.98. So the answer that you are going to get here, you are going to multiply it by 0.98. And then you get the final answer now. So when you calculate it like that, when you calculate it like that, let's try to calculate it. There you say 0.92, 0.92, 0.92. Then you multiply by 148,750. When you multiply to get 136,850, 136,850 here, it becomes 136,850. And then you multiply it again by this one 0.98. And let's see what we are getting there. And then you multiply it by 0.98. It will get 134,130. So this is the figure that we are getting there. So this becomes the final figure that is being asked. Remember, the question is saying calculate the amount of the debtors control after the adjustment. So this is the figure 134,130. So we go to the next one, which is 5.8. And 5.8 is saying a tenant moved into the building on 1 July 2019. The rent payment was set at 3,500 rands per month, but was raised by 10% on 1 January 2020. No deposit was payable on occupation. Then the first part is saying calculate the rent per month from 1 January 2020. So we are seeing that from 1 January 2020, it was raised by 10%. So basically, this was 100 percent, 3,500. Then raised by 10%, it becomes 100 plus 100 plus it becomes 100 plus 10, and it becomes 110%. So 110% is a decimal. You divide by 100, and it becomes 1.1 as a decimal. 110%. So we just multiply this one 3,500. Then you multiply by 1.1 to get the rent that was there in January. So if you multiply by 1.1, it becomes 3,850. So this is what we have in terms of 5.8.1. Then you go to the next one, calculate the total amount receivable for the financial year. So here, it's not going to be very difficult. What we are going to do, we are going to say, to count the months that were there before the rent was increased. Remember, the tenant moved into the building on 1 July. So the tenant stayed in the building before the rent was increased. It was July, August, September, October, November, December. And then January, it was increased. So it means 1, 2, 3, 4, 5, 6. So it's close to 6 months. It was not increased. And then from January, remember the year is ending in May. From January, February, March, April, May, it was now increased 1, 2, 3, 4, 5. We have now 5 months. So what we are going to do, you're going to multiply 6 by, before it was increased, it was 3,500, 6 times 3,500. Then we add to when it was increased, it was now 3,850. Then we say 5 times 350. So you can just express it as 6. You multiply by 3,500 before it was increased. And then the answer that we get, we add to when it was increased, it was 3,850, but it was only for 5 months. It was only for 5 months. So there, if you calculate that one, you'd see that you calculate this one, and then you add the answer that you are going to get that one. So here, if you multiply by 6, you get 21,000. If you multiply by 6 here, you get 21,000. Then here you multiply by 5, you are going to get 19,000, 19,250. Then you add the 2 to get the total. It becomes when you add the 2 now, to get the total, you get 40,500 now. So 40,500 is the figure that is being asked. So this one becomes your answer there.